don't have executives. There's an executive in a company in Ballackinwood with about 400 employees who looked at moving in. And basically the reason, one of the main reasons they didn't is because their executives that made a lot of money said, we're not giving, you know, $50,000 a year to the city of Philadelphia so that we can move in. So we have to look at radical ways to resolve the issue of CEOs deciding whether or not to move their company in, because part of this decision they're going to make, if it's a medium business that they control, medium-sized business, it's family-owned, et cetera, is what does it mean to me personally? Yeah, I'd love to help the city, I'd love to do it, but if it means that much to me, you know, I've got grandchildren that are going to get a college fund, et cetera, you can go to the city of Philadelphia or them. You know how people are making that decision. And then, so basically what we have to do is, within the confines of the business tax structure, have the least unfavorable tax possible, while we can, and then later we can move from any business tax over to real estate tax, because we can over time cut the cost and size of government and eliminate business taxes. Business taxes are $380 million, so it's 10% roughly of our budget. We could probably eliminate them over a 15-year period and not miss a beat as the economy starts to grow and tax revenues come in. While we're waiting those 15 years, what tax system do we have? Right now, we have a very high rate, narrow base tax system. So we pay 6.45, businesses pay 6.45% of their net income to the city of Philadelphia. That is, businesses that are located in the city of Philadelphia do. Businesses that are not in the city of Philadelphia can avoid that tax simply by doing what Walmart, Target, Lowe's, other people do, which is set up in Delaware or Nevada, holding company, charge rent for the store that's equivalent to what they expect their net income to be that year, and they avoid both Pennsylvania taxes and Philadelphia taxes. It's just too easy to do. We don't have the audit staff to go after that and, you know, and prove that their corporate overhead allocation is incorrect or unfair, et cetera. So we need to go, and any economist will tell you that this is a good idea, from high rate, narrow base tax to a low rate, broad base tax. The net income in the city is about $4 billion a year. The gross receipts in the city, and this is counterintuitive to everything people have heard for the last, I don't know, 15 years. Gross receipts in the city is a $77 billion base. So we can eliminate a 6.45% tax on net income and replace it with a 0.5% tax on a revenue neutral basis, a 0.5% tax on gross receipts. And that will be the only tax you pay. I'm going to tell you why that's great for Philadelphia. Here are the tax rates I just went through. Here's an example of the hospitality sector that actually happened. The Hotel Association, when I first proposed this, gave me a chart that showed, because we asked them, well, what if Philadelphia managed and owned hotels pay in tax versus a hotel that is not a Philadelphia managed and owned hotel. So they're allocating in corporate overhead, rent, charging rent, et cetera. Here it is. So under our current tax structure, the local hotel will pay $184,000 in taxes on $19 million in gross receipts. The out-of-town hotel, and they all charge, these are, I know what hotels these are. These hotels pay, they're very equivalent in size, in quality, etc. So in fact, the cost structure of the local hotel is higher because it's union and the other hotel is non-union. They pay $184,000 in tax. outside Philly, they pay $26,000 in tax on the same gross receipts. That is the kind of competitive disadvantage Philadelphia businesses are in just for being located here. You can see that if we went to a 0.5% gross receipts, they'd be competing on a completely level playing field. This is a manufacturing example. Manufacturer in Philly, all of your goods come out of here. Right now you're taxed on property, plant, equipment, and employees. We changed that to single sales factor, so we're leveling the playing field, but they'll still be at a slight disadvantage. This is before the change I just discussed. So look how unfair that is. The cost structure of the Philadelphia business to compete on manufacturing margins is much higher, penalized for being here. What would it be under 0.5%? It would be the same exact tax because they would be on a completely level playing field. It wouldn't matter whether the manufacturer was in Russia or Philadelphia. They would pay the same tax to the city of Philadelphia based only on goods sold in the city of Philadelphia and not goods sold outside the city of Philadelphia. Let me see if there's other examples here. Okay, so that's the fundamental basis of the proposal, to put Philadelphia businesses on a level playing field, to do it on a revenue neutral basis, to take us from a 6.45% narrow-based tax to a 0.5% broad-based low-rate tax, and make Philadelphia businesses compete fairly on a level playing field. What I did not discuss is the supply side effect of all that. In Center City office space, so it doesn't have to be on a revenue neutral basis, but it's never going to get passed unless it's on a revenue neutral basis. We'll have tens of millions of dollars more a year in city revenue if we make this change, because businesses that would otherwise leave will stay, and businesses that were not here will come into the city because they would rather be here than Conshohocken. They really would, as first round capital proved when we eliminated taxes on that industry. Center City office space pays about someone with 25% margins, which is knowledge-based industries, law firms, accounting firms, etc., that fill the office towers here. They pay $12 a foot in economic rent to the city of Philadelphia in the form of the net income tax above their $27 a square foot of rent. This is demonstrated because at Sierra, they're actually paying in the mid to high 30s rent because they can avoid the business taxes. In Center City, they're paying the same thing, 39 bucks, 37 bucks a foot, but most of it's in business taxes. If we did this, they would be paying about $1.50 a foot in Center City towers and high margin businesses, and that would allow landlords to capture some of the difference, some of the economic rent that used to be paid to the city of Philadelphia in the value of their building. As leases come up for renewal, they could get increases. We value Center City office space based on cash flows and the profitability of the building. That's 35% of our tax base.